Artificial intelligence, AI, in finance. Consider a world in which money moves more quickly than your eyes can track, where computers anticipate stock market movements, prevent fraud before it occurs, and even understand your financial needs better than you do. Does that seem like science fiction? It's not, though. This is the realm of artificial intelligence in finance, and it has already arrived. Number 9. Algorithmic trading when machines beat the market. AI really shines in algorithmic trading. AI algorithms can process millions of data points in milliseconds, identifying trends, patterns, and opportunities that people could completely overlook, in contrast to human traders who rely on intuition, experience, or gut feeling. These programs have the ability to respond instantly to changes in the market, making transactions more quickly than any human could, and occasionally making profits in a matter of milliseconds. In order to predict short-term market fluctuations, high-frequency trading companies such as Renaissance Technologies or Two Sigma employ artificial intelligence AI to examine past price data, news, and even social media signals. The outcome? Machines that are faster and more accurate than humans. However, there is an exciting tension here. Losses can be enormous if an algorithm misinterprets a signal or a flash crash happens, highlighting the fact that although AI is strong, it is not perfect. Number 8. Risk management. Predicting the unpredictable. AI is revolutionizing the management of risk, which is the lifeblood of the financial industry. In contrast to traditional risk assessment, which mostly depends on past data and human judgment, artificial intelligence AI forecasts dangers before they materialize by using machine learning to identify tiny trends across massive data sets. For instance, banks now employ artificial intelligence AI to forecast loan defaults by examining transactional patterns, credit histories, and even social media activity, frequently identifying warning indicators months before they become serious. Beyond lending, AI algorithms keep an eye on international markets to predict economic shocks, stock crashes, and currency swings. The tension is tangible. Risk management still necessitates a careful balance between human oversight and machine intelligence since, although AI can anticipate possible hazards, it cannot predict every black swan event. Number 7. Fraud detection, catching criminals before they strike. AI has emerged as the ultimate investigator despite financial fraud being a quiet epidemic that costs institutions billions annually. AI can identify anomalous patterns or behaviors that point to fraud by continuously evaluating transactions. In order to halt fraudsters in their tracks, credit card firms, for instance, utilize AI to promptly block accounts when suspicious behavior is discovered. AI is a practically unstoppable force against cybercrime because, unlike humans, it never grows weary or ignores irregularities. But as AI develops, scammers also create clever ways to get around systems, creating a high-stakes game of cat and mouse that keeps the financial world on edge. This is a continual, tense conflict. Number 6. Personalized financial services, AI that knows you. AI is transforming standard banking into a customized financial experience. AI uses predictive analytics to examine your income, investments, spending habits, and even life objectives in order to provide recommendations or solutions that are unique to you. For instance, investment portfolios can be automatically modified by robo-advisors such as Wealthfront or Betterment in response to shifting market conditions, retirement plans, or your risk tolerance. The benefit is enormous. Tailored financial advice is now available to everyone, not just the wealthy. These days, anyone with a smartphone may access methods and insights that were previously only available to wealthy investors. The key question is whether people will completely trust machines to handle their finances, or if human intervention will always be required. Number 5. Credit scoring, expanding financial inclusion. AI is revolutionizing credit scoring by using non-traditional data sources to evaluate creditworthiness. Beyond just payment history, AI can analyze social behavior, mobile money transactions, and online financial patterns to determine whether someone qualifies for credit. This opens the door for millions of people and small businesses who were previously excluded from formal financial systems. For instance, in developing countries, AI microlending platforms can assess loan applicants based on mobile transactions, providing access to capital that can transform lives. Yet this innovation brings suspenseful ethical questions. How do we prevent AI from inheriting biases or making unfair decisions, especially when relying on unconventional data? Number 4, regulatory compliance, navigating complexity with AI. Regulations governing the financial industry are intricate and constantly evolving, and non-compliance can have disastrous consequences. By automating monitoring, reporting, and auditing procedures, AI helps organizations stay ahead of the curve. By identifying patterns suggestive of insider trading, money laundering, or market manipulation, machine learning algorithms enable banks to take action prior to regulatory intervention. Number 3, portfolio management AI as your wealth strategist. AI is actively managing investments and portfolios with expertise once only available to elite financial advisors. It is no longer restricted to trade. AI regularly assesses market circumstances using predictive analytics, modifying asset allocations to optimize returns while lowering risk. While retail investors can use AI-driven investment platforms for personal wealth management. Number 2, market sentiment analysis, listening to the world. Markets are influenced by human emotion, hearsay, and perceptions rather than just numbers. AI can use natural language processing, NLP, to interpret this disorganized data, evaluating news, social media, and investor sentiment to forecast potential market reactions. AI, for instance, may analyze millions of tweets about a business and predict changes in price before traditional indicators do. Because of this psychological advantage, traders can respond to public mood before the general public does. However, the intrigue lies in the fact that human emotions are erratic and unpredictable. Therefore, AI must continuously adjust to prevent misreading market sentiment. Number 1, cost reduction and efficiency. AI behind the scenes. Even though AI excels at trading and investing, its subtle effects on productivity are equally revolutionary. Automation lowers operating costs and human error in tasks including data input, transaction reconciliation, reporting, and customer service. These days, banks use AI chatbots to give immediate customer service around the clock, managing thousands of questions at once without becoming tired. This enables workers to concentrate on strategic projects and intricate problem solving. The tension arises from the need to strike a balance between human interaction and efficiency. While AI enhances operations, financial institutions must determine how much control to delegate to computers. Artificial intelligence in finance is an intriguing field that involves machines that are more intelligent than people in trading, forecasting, and even managing money. The future of finance has arrived, and it is more unpredictable, quicker, and sharper than we had anticipated. If you thought this was amazing, please hit the like button and remember to subscribe for more videos about the technological advancements that are changing our world. Remember to click the bell button to ensure you never miss the next significant advancement in artificial intelligence. Comment below what amazed you the most, and would you trust AI with your money?